Hey guys, welcome to the channel, the Blackjack Trading. So in today's video, we are going to do a lot of back testing over here. So I'm going to decode some trades in the SPY over here. So we have trading, or you can say we are trading in the S&P 500 or the smallest signature of it in the SPY. So what we are going to do, we are going to analyze and decode the trades in the intraday trading on a 1 minute chart time frame, and we are going to understand how you can take different opportunities, or you can take you can take different trades based on the smart money concepts in the market, which is highly based on the liquidity and also the direction of the market. Okay, so let's start from any random day. So what I'll choose is over here, somewhere, anywhere in the market. We are going to choose a day from where we can start the judgment or where we can start the decoding of the market. So let's look over here in this day. What's happening in the market is that the price is giving us support from here. Okay, so this is the major support that the price created. It doesn't matter which day is it and what is the price action. What you need to do and you need to understand is the basic principles of the smart money concept, so that you can intraday trade and make huge profits regarding the same. So what's happening over here? Let's see. Let's have a mark over here. So we can describe the market in a series of higher highs and higher lows. So what we are understanding is a series of you can say when the price is an uptrend, the price creates a few something like this, a series of higher highs and higher lows, and the price creates a series of lower highs and lower lows when the market is about to go towards the downside. So this is the major thing that you have to remember while understanding the direction and the liquidity of the market. Okay, so over here, what we can understand is that the price is actually making a support from here, and before that, now all the observation will start from the supports. What we're going to do, you're going to put up a vertical line over here, and you need to start your understanding in the market from this previous support. What you need to understand is where is the previous major support that has been created in the market, and then the price went down from there. Okay, so over here, what you can see is before this major support, there are two major levels of support which I can see. One is over here, and then one is over here. So how the market was behaving before that was something like this. Price created a lower high, lower low, a higher high, and then quite a lower low, and then a lower high again, and then a lower low again. Okay, so this is how the prices you can say moved in the past from the previous day. So what did happen over here? We can see that the price has created a range, or you can say major last support from this level, from where the price has started moving towards the downside. Okay, from the this is the highest point from where the price started moving towards the downside and started moving towards the downside, and actually started creating a support over here. So this is the major support, and this is the major resistance in the market. So now what we are going to do, we are going to take this as a single leg. Okay, so now we're going to delete the support, and what we're going to do is that now once the price actually creates a major support from this level, this will be marked as a breaker structure over here. So what we are going to understand is this is the breaker structure. That means till the price is actually creating a series of lower highs and lower lows, we are actually expecting that the price will go a little bit more downside. Okay, so let's see how the price behaves. So from here, what we have to understand is also this point from where the price actually created the previous breaker structure over here. So this was the last, you can say, breaker structure in the market, from where the price actually broke the support, created a new support in the market, and from this previous high in the market. Okay, so this is the major previous high from where the price actually started going towards the downside. So we have marked the major 3 points over here: the previous support which has been broken, the resistance which actually broke this major breaker structure. So this will be regarded as a chalk. So this is regarded as a chalk in the market. That means if the price goes above this level, okay, if the price goes above this level, like this, then it will be a change of character in the market. And if the price goes back to this level, then it will be a breaker structure in the market, and the market will continue the trend towards downside. Okay, so from here, what we need to understand is how will we know if the price is going to go, take this or this out. So for now, you can see the price, so you can, you can confidently say, so the price will go upside, and I should have taken a trend reversal entry. But that doesn't happen off so often. Why? Because when the price actually does the when the price actually does this, then the price is also capable to do something like this and go in a continuation trend, or you can say follow the continuation trend of the previous trend in the market. Okay, so what we need to be is to be aware in the market of what we are doing and how we need to interpret this internal structure that is being made in the market. Okay, so this internal structure or the study of the structure will actually help you out in getting the instance of whether you are looking for buying or selling in the internal market. That means if you are taking a buying, let's say over here or over here at this point, that means you're taking a reversal trade in the market. Okay, so this is how we take the reversal trade. And if, let's say, from this previous resistance, the price creates a series of low highs again, and then we are going to take a continuation trade that is towards the downside again. So this is how we actually decode the market as such. So so what happens over here is that we have to understand the internal structure. So price created as something like this. Internally, the price created a first buy leg like this. So I'll change the color so that we can have a proper understanding. Let's create it white. And from this white, the price actually went down. Okay. Now what had happened over here? What we were expecting is that if the price really wants to take this support down, then what the price needs to do is to create a series of a lower high and lower low again in the internal structure as well. But that didn't happen. As you can see, what had happened from this major support, the price actually created a higher low, and from this higher low, price actually created another higher low in the market. Okay, so what had happened over here? This is the first instance in the market, or you can say this is the first example, which is accordingly setting the example that the price is not in the mood to go towards the downside. Rather, it really wants to go towards the upside. That is why the price is created as an internal structure or a series of higher highs and higher lows again towards the upside internally. Okay, so when this internal change of character happens in the market, we mark it as an eye chalk in the market. So this is the internal chalk that has happened in the market, and the price started moving towards the upside. Now again, from here, what did happen? The price did what? The price again took a, you can say, a backlash or towards the pullback towards the downside again. And from here, we have to see again whether the prices really want to continue towards the upside, so we can take a buy trade or not. Okay, till over here, at this point, there is no trade in the market. You cannot just directly buy in the market because this is a high and low, so we can expect the market will go upside. No, that doesn't happen, because so often you will see that the price creates a higher low, goes towards the upside, takes out this liquidity in the market, and then finally go towards the downside. So we need to understand, or we need to wait for this leg to be created, or you can say this leg to be enough dominant in the market so that we can have a clear picture that the price really wants to go towards the upside and is not looking to go towards the downside. Okay, so from this point, what had happened? The price created another, you can say, major resistance in the market, or you can mark it as an internal breakout structure, or IB. Okay, so from here, what did happen? The price actually went down, again went up, created a series of higher high. Now this is the continuation. So what is happening in the market is that the market is continuing its internal structure over here, and that is why what we can do, as soon as this resistance breaks out, okay, as soon as this resistance break out, we can take an entry towards the upside. We can put the stop loss on the low of the previous candle or on the swing low, and then we can finally take a 1:3 risk reward trade from this level. Okay, so why? Because now, as soon as the price actually gives us a series of a higher high and higher low, from here what we can expect is that the price really wants to go towards the upside. Okay, so price really doesn't want to go towards the downside again. Now there is the probability that it can happen. Okay, you can't just expect the market, no, it will go only upside. So that is not truth at all. The price can really go towards the downside even after breaking this resistance, but trading is all about the probability. Okay, so let's continue. So what happened over here, that the price actually started moving towards the upside again, and that's why we took a buy from here after seeing a series of a higher and higher low, and seeing that the buyers are actually dominating the market right now, and we should be putting our money on the upside. Now, what had happened from here? The price continued to create the series towards the upside. So let's mark the major highs. So this is one of the major high where the price created another internal breaker structure. That means the price actually moved something like this again, and then further the price moved like this. Okay, now this is the major point where you have to understand the liquidity. Okay, so this is now what had happened. Price is now taking out the external liquidity that the price is creating. So till over here, what was happening in the market was that the price actually, was taking out the internal liquidity. The stop loss is present over here and over here. And now, as soon as the price crosses above this major chalk in the market, this is where the external liquidity is being taken out in the market. So what we can do is we can mark over here that this is the external liquidity over here that the price is trying to take out. Now, another point that you have to very much look at, since the external liquidity is being taken out, you have to very much identify whether this liquidity is being taken out by a wick or by a body confirmation. So if this is a wick, okay, as you can see that the price went up and then back down and then candle closed over here, that means this is a sweep, or you can say wick out. So what will happen over here, that the price is only interested to take out this liquidity, but do not really wants to go upside. Okay, so till the time the body is not confirmed, this is the only identification that you have to watch out, that the price has really not given us a chalk. This is just a sweep of liquidity. Okay, this is just a sweep of liquidity that is happening in the market. So from here, what did happen? Okay, so let's move further. So from here, what did happen in the market? The price actually, continued this internal structure. So this is the internal structure that is being being continued. So price actually continued this internal structure and finally gave us a breakout with the body confirmation. So above this high, as you can see, the price over here took out this major liquidity or the external liquidity with the body confirmation. The body actually closed above this candle. So now what can we say? That this is a pure chalk in the market, and the price is now in the upside direction. So internally the price was in upside direction, and externally the price was in downside direction. As you can see the sell leg size. The sell leg size is bigger. So now over here, it is very much clear that actually the price is not at all, you can say, in the downside direction now. It's all on the upside. Okay, the price is given us chalk and is like trying to move towards the upside. Okay, so this is the major momentum that you have to catch. Now, what happening over here is, so now is there any trade that can, or is there any opportunity creating? So now let's understand if there is any opportunity over here. Since the price actually created a sweep over here and then finally created a sell leg over here, we have to see if we can take a buying opportunity in this buying leg. So over here, what did happen? The price actually continued towards the upside and then created a series of higher high and high. So from this major resistance breakout, what we can do, we can take a buy opportunity, put the stop loss on the previous low over here. Okay, so let me delete all the other drawings over here so that you can really understand much. So now over here, what is happening? So as I told you, what you can do is you can take a buy above this high in the market, put your stop loss, below this candle, or you can say below this swing, or on the closure, on the opening of the previous candle. So this is how you can place a stop loss of the different things. You can ask me much more deeper questions, and when you are taking a personal session with me, then that's where you can be much more questioning about it. But right now, let's say the stop loss is over here, or you can put up a conservative stop loss over here or aggressive stop loss over here. In both the cases, you can see that we have actually achieved the risk reward of 1:3, which is our targeted or a dream project in the market. Okay, so again, what had happened that the price created and give us one more target over here. So let me reduce the size. So from here, what I'm expecting is that the price is moving towards the upside. Okay, now look at this picture. So what is happening? The price is continuously moving towards the upside, upside, upside by creeping, or you can say giving higher highs and higher lows. Now what did happen? I need to wait for another sellers to settle in the market, and then I can go again with the buy. So what did happen over here? While price is going towards the upside, the price created another major resistance over here. Okay, another major resistance over here. That means the price, as you can see, started moving towards the downside, giving a sliding towards the downside again, and creating another support. And from here, we can do what? We can take another opportunity towards the upside. As you can see that the price is trying to continue the major trend towards the upside only. So we can take a buy above this level, putting the stop loss below this, you can say swing low, or you can take an aggressive stop loss of putting the stop loss of below the, you can say previous candle in the market. So this is how the two stop losses can work, and you have to target for 1:3 again in the market. So this is our target for 1:3, which you can see is actually fulfilled in the market. So this will be acting as another breaker structure over here. Okay, now one more interesting point, as you can see over here, is, as you can see that this interesting point is this. The point over here is that as soon as the price breaks this resistance over here, first the price actually tried to sweep it. Okay, the price didn't confirm the body, but as soon as the another candle broke the high of the previous candle and then confirmed it with the body, this will be confirmed as a breaker structure. So the major understanding of the difference between you have to understand while sweep in the market is this. Okay, if the price sweeps and starts going downside, then it is highly a manipulation trade, and then we can take another sell opportunity towards the downside. But if that doesn't happen, that means the next candle continues the momentum and then confirms above it, then this will be regarded as a proper breaker structure in the market. Okay guys, so now let's look at the next resistance in the market. So what is happening over here? The price created another resistance at this level. Okay, so while moving towards the upside, the price continuing its major you can say direction towards the upside, something like this, creating a sell leg and then a buy leg again. The price has started creating a sell leg again from this point, and you can see properly with your naked eyes that the price is going towards the downside in a huge momentum, or you can say with a strength. Look at the size of the candles of these candles. You can see this is a huge strength in the sellers in the market, and it is also inducing various you can say retail traders to actually sell. Okay, while this move is happening, this can be regarded as a three red crows or something like that, 3 black crows, which is indication that the price really wants to go towards the downside. So this is a kind of a pattern that many traders use. This acts as a wall, and the price cannot go above this level. This is what they think, and they try to sell along with this major wall. Okay, but this is not true. Well, because the major structure is upside. If the price really wants to go towards the downside, the price has to first go through this level. Okay, the price first has to, you can say, break this major support in the market, and only then we can expect that the price in the future will go towards the downside. Okay, so this is the major momentum. Now, let's understand now where is the trade opportunity in this swing in the market. Okay, if I want to understand where is my trade opportunity in this swing, so let's understand and decode the level. As soon as the price breaks the major, creates this major resistance in the market, so let's mark the resistance. So this is the major resistance. We will act as or you can mark it as a breaker structure in the market. Okay, so you have to use magnet sometimes. All you can do is sometimes you can use this magnet if you are not able to point it very well. So you can use this magnet. Now this magnet will help you point out this line properly. Okay, so now this is what, this is the major breaker structure. Now don't look at the right hand side, because this is where we have to find a trading opportunity. So before this, we have to start understanding this internal structure that is being created in the market, so that we can take a proper trade in the market. Now what's happening over here is, you can see and you have to understand in a series of internal price actions. So in this internal price action, what is happening? The price goes down. Okay, the price goes down, and this is the first point where the price tries to create a support. As you can see, this is the first point where the price tries to push towards the upside. Now from this support, what we are expecting is that the price will try to do something like this, create another higher low, and will try to move towards the upside. But that didn't happen in the market. What really did happen is, price created a support, and then finally price break this major support towards the downside again. Okay, so price break this support, creating us or showing us that the price is not in a mood to go towards the upside for now, and the price wants to take out the external liquidity available over here. So there are two liquidity points. This is the external liquidity, and this is the external liquidity available over here. All other things, stoppers over here or over here or over here, every other thing is internal liquidity. Okay, so we'll be discussing this in more detail in the coming videos. So do not forget to subscribe to the channel, and if you have any questions, you can push it on to my WhatsApp number. I have displayed the WhatsApp number on my description, guys. Okay, and if somebody wants to note it down, so let me check what's my WhatsApp number. Okay, yeah, so it's +919258046687. So you can contact me over here. You can have the personal sessions if you want to understand more of it, but I am trying to help you best, guys, so you don't have to go through courses. You don't have to. So basically it's like I'm kind of stuck over here. So it's like I don't want you to push yourself. Okay, just understand the simple things. If you are still having problems, then you should contact someone. If not me, then do get help with someone. If you're not able to understand the market and you're still trying to figure out how to create a living in this market, it's very easy. It's damn easy, I'm telling you. And say it to yourself as well. Say it to you 100 times that it's easy to make money in the markets. It's easy to make money in the markets, and only then you will see that the things are happening according to your according to your accord, or you wish, something like that. Okay, so be optimistic and try to have a glimpse of the picture. Try to read the price action well, and this is how you actually find the opportunity. So if you look at this major trend in the market, no doubt this is a very trending day. If the price would have been something like this, then our perspective or our studies have to be very deeper to understand and decode the market, something like this, which we'll be doing or you will say we'll be doing in the coming videos as well. Okay, so for now we have understood and decoded three major trades in the market, 1, 2, 3, where we have taken the continuation trades of the buy. This was the reversal trade, because the major trend till this you can say till then was you can say in the downside direction, and for the first time we took a reversal trade in the market because of the internal structure itself. And then you can see for second trade was in a continuation, because after the price has given us a proper chalk or the external liquidity towards the upside, they've taken a continuation trade towards the upside, and the third trade is in the same of the continuation. So one reversal trade and actually two continuation trades, and we have made around 9% in the market with proper three trades. Okay, so trading is not I'm not saying that it's very difficult or something. It's very easy. However, your own self is very difficult to handle. Okay, in trading, all you have to handle is yourself, nothing else. Okay, guys, so this is one of the things that I want to advise you for today. And we will be coming more. I think I'll be doing live with these sessions as well. So do not forget to subscribe and hit the bell icon, because when I will be coming live, you'll be able to come and join with me, okay, and talk to me on the live YouTube. Okay, guys, so till then, take care, and we'll be coming to the next video, and we'll be discussing more about these concepts. And actually I'm planning to start with the live trading as well in the gold itself. So if there are gold traders present in this channel, welcome to you all, and we'll be trading much more gold itself. So this is one of the SPY. This is one of my favorite security in the market, which I actually trade on a very much basis because all of my New York clients. So I actually give personal one-to-one training and live trading with the market. So many of my New York clients prefer SPY derivatives. So that's why I'm very keen of this chart as well. In the future, we'll be discussing more about the gold and much more things. Okay, guys. Till then, hasta la vista. Take care, and see you in the next video.